The International Monetary Fund says Sub-Saharan Africa's favorable growth rate will continue into the next year, despite risks posed by the Ebola outbreak and a general global economic slowdown. The IMF has pegged growth rate in Sub-Saharan Africa to rise to 5.8% in 2015. That's at least 2% higher than the global average, and the global lender launched its regional economic outlook for Sub-Saharan Africa in Harare in Zimbabwe today.
Africa's rosy economic picture is overshadowed by the deadly Ebola outbreak, as well as civil wars in the Central African Republic and South Sudan. Despite this, the IMF believes that Sub-Saharan Africa will continue to be the second fastest growing economy in the world, behind Asia. The growth forecast has been slightly dampened by the slower than expected global growth and a marked slowdown in emerging markets, India and China, key commodity export markets. The IMF pegs Sub-Saharan Africa's average growth rate for 2014 at 5%.
The majority of countries will continue to enjoy strong growth, driven by continued public and private investment, and especially in infrastructure, buoyant services sectors, and strong agricultural production. That's for the majority of countries. And these factors will allow the positive momentum to prevail even as oil-related activities will provide less support.
In Southern Africa, South Africa's neighbours' growth will be affected by the economic giant's lackluster performance. South Africa lost its top spot as Africa's largest economy to Nigeria earlier this year. The IMF forecasts that South Africa's real gross domestic product will slow to 1.4% in 2014 and rise marginally to 2.3% in 2015, making it the third slowest growing economy in Southern Africa. The IMF blames domestic policies for the slowdown.
Growth remains lackluster due to electricity bottlenecks there, to a weak product market competitiveness, and to difficult industrial relations, as we've seen in the course of the past year.
The IMF has pegged the 2014 global GDP growth rate at 3.3%, rising to 3.8% in 2015. While Africa continues its growth trajectory, many here believe that growth needs to be a lot higher to overcome poverty and high unemployment. The IMF has urged African countries to sustain the growth, but make it more inclusive by addressing bottlenecks such as infrastructural gaps as well as the public debt. Shinga Nyoka, SABC News, Harare, Zimbabwe.